What if I told you that both Gen Z and baby boomers are driving the same rental boom, but for completely different reasons? Over the past few years, we've seen a shift in sentiment in the US, and homeownership is no longer the American dream, flexibility is. Welcome to Strategy Saturday. I'm Charles Crillo, and in today's episode, we're breaking down how demographics are driving demand for apartments and what this means for investors across the country. Demographic trends have been shaping the demand for apartments and multifamily housing throughout the United States. And as these trends evolve, they're changing who is renting, why they are renting, and what this means for real estate investors. So here are the key factors fueling the multifamily housing demand. Number one are generational shifts. So a significant number of millennials in their 30s and 40s still rent, and Gen Zs in their 20s are entering the workforce and are predicted to be the biggest generation of renters in the next decade. Baby boomers are downsizing from larger single-family homes and moving into senior living communities and the apartments for convenience and lower maintenance issues. Number two are delayed homeownership trends. So the rise in home prices since 2020, along with higher mortgage rates, is making homeownership more difficult for many households, making them longer-term renters. Younger professionals enjoy the freedom of renting for career mobility, flexibility, and the ability to live in sought-after urban and suburban areas. Number three is household formation changes. So there are more single-person households and childless households, which are pushing more multifamily housing demand. Divorce rates and people delaying marriage are also increasing the number of single-person households. Number four is urban and suburban growth. So it is typically easier and less expensive to rent in popular urban and suburban communities than to buy. And number five is lifestyle preferences. So many renters across a wide range of age groups value flexibility and convenience over home ownership responsibilities. Renters by choice and not necessity, including the new millionaire renter, make up a growing share of rental demand. And owning a home is more expensive than renting and is more time consuming. Yes, if you go on social media, every real estate agent will tell you that purchasing a house is less expensive than renting and it's the best investment in the world, and you cannot become wealthy without buying a home. And this is just marketing BS. Possibly your mortgage payment will be less than your monthly rent, but then you tack on everything else that everybody always forgets about. The repairs, the updating, the renovations, the furniture, the new deck, the new patio, the landscaping. All this money is being invested in something that provides no return for years or if ever. And just ask any person who owns a home and see what they spend their weekends doing and what repairs they've done lately. Another part of this is the economic and social changes. So many people are in debt, student debt, auto loan debt, credit card debt, and home prices and interest rates are still relatively high when compared to pre-COVID era pricing. Aging baby boomers might find life easier in senior-friendly communities versus a single-family house. And I recently read an article that many people in their 20s, 30s, and 40s are more focused on investing than purchasing a home, as they see it as a better route to wealth. In summary, the apartment market is being redefined by young adults delaying homeownership and older adults choosing to downsize. Both situations are contributing to long-term demand for multifamily housing. So I hope you enjoyed. Please remember, rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.